I'm with Ross McSkimming, Senior Investment Specialist at Aberdeen Standard Investments. Ross, can you tell us a bit about your expertise in impact investing?
Within Aberdeen Standard Investments, we have a huge amount of resource in that ESG area within the company. We integrate ESG throughout the whole investment process, and I think that's absolutely critical for a large active manager to do that. Now, when I talk about resources, we have a large centralised team of approximately 20 people, and they're writing thematic pieces on ESG. But we also have experts of ESG that sit on the regional teams, and they form part of the investment debate. So when people are discussing stock ideas, there is a requirement for the ESG analyst to also participate in that conversation.
Thank you very much, Ross. Can you tell us a bit more about the goals of Aberdeen Standard Investments in impact investing?
So we have developed a number of strategies on impact investing. Now, to us, this is not a philanthropic exercise. As a large asset manager, we are not here to give away our clients' investments. In fact, we're there to make them return. So what we do when it comes to impact investing is finding those companies where their products and services are actually making a contribution to the society or to the environment, but they will also make a financial return, because ultimately achieving that double bottom line of positive financial return and positive impact is a goal that we want to achieve.
Thank you very much, Ross. Can I ask as well why pension funds should consider impact investing in your view?
Clearly there's a large amount of issues that need addressing, and it needs everybody to be participating in the resolution of these goals. And these have been quantified by the Sustainable Development Goals set by the UN. And they require anywhere between $5 and $7 trillion every year for the next 15 years if we've got any hope of trying to resolve these goals. So what we are trying to do through utilising the UN's Sustainable Development Goals is to try and direct capital towards those companies making a difference. And if we can invest our clients' capital into areas where they're making a difference, then we see that as hugely beneficial. But as I said, that double bottom line is absolutely important because we want to deliver a positive financial return. So those pension schemes that are investing in typical equity strategies, it's almost, to me, it feels like a no-brainer if they could divert that to a similar type of investment where they're making the same similar amount of return, but they're also making a positive difference as well. And that's ultimately what impact investing is doing.
Thank you, Ross. Lastly, can I ask, within the typical asset allocation of a pension fund, are there any asset classes that you think particularly lend themselves to impact investing?
Where I come from, I have an equity background. I would always promote the equity capabilities in that space. You know, being a very large asset manager, we have over 700 billion of assets under management, and as a consequence of that, that means we can provide that additionality. We will vote and be active shareholders. So by participating in the investment discussion, we can encourage better behaviours across companies as well, and that's where I see the additionality coming from. And you can do that through voting on your equity shares.